I was giving an analogy earlier about your GPS and recalculating. So we're going to talk with some companies here who are doing that. They're finding the new roads, right? They're making the new turns and everything that's going on in today's society. So I want to welcome, this is Matt Lyberg. He's with Manulife Investment Management. And then we have Sheri Rhodes. She is with Workday. Sheri, I want to start with you because you have some interesting background. So you're the Chief Customer Officer at Workday, but you've also served as CIO also. So you have a good perspective. So if you can talk to us, the customer is, right, you're central to the company. How is that experience, the customer experience, how are you using that to drive profitability?
Yeah, great question. So I would say a couple things. One, as the CIO and then now the CCO, it's really about value. So as the CIO, it was like, how do I drive internal value for the stakeholders? And then now I get to do it from an external standpoint. But I always tell people I have a lot of empathy for customers because I've been in their seat, right, in terms of driving transformation and change. But for me, it's about how do we create value on a continuous basis, which then helpfully, right, we're part of that growth engine for our company. So I always say it's like coins in the glass jar. Everything that you do for a customer is meaningful. So whether it's small, making sure that you have, solved their biggest complaint, their smallest complaint, you pick up the phone when they call, all of those things matter in terms of building long-term stickiness and value with your customers. And then they tend to give you grace when something maybe happens on occasion, right? They give you grace for that. So to me, it's around that long-term adoption, that long-term stickiness, which then drives ROI for the company.
Excellent. Now, Matt, I have to turn to you because looking on the screens here, your title has an AI in it, okay? And that is, I'm not sure if that's something you ever would thought would happen, but we're seeing that a lot more nowadays. So in that terms of respect, how is AI changing the way you manage money over at Manulife? And I also want to point out, we had an earlier question from the audience too that kind of plays into that. It's how is AI already changing investment opportunities and decision making?
Yeah, I think it gets back to what Sheri was saying about value, right?
Yeah.
When we think of an investment, it is the search for value, kind of uncovering that. And what's surprising for me is how much our investment process has not changed since we embarked on the program. And I think that's because it's investment led. Right? We look at the investment team as our clients, and we're thinking of what do they need. So Manulife is a fundamental shop, and in the fundamental process, you're going as deep as you can on companies. So you're looking at financials, you're looking at your notes, your own research notes, you're looking at the sell-side reports. What does it mean to have to integrate all of that? Maybe a coverage launch, you have a little bit more time, but maybe there's a dislocation in the market. And so what we've seen with the way that we're building this is an acceleration, right? The data aggregation, alignment, and sort of discernment process is now assisted with AI. And so we had an example in early April when the U.S. government embarked on the I think Liberation Day. Liberation Day, yeah. Right? So we had a semantic search capability in place such that you could look across 6,000 companies or look at even in your own portfolio and see how management was thinking about tariffs in the previous earnings season. And you could think about what would that mean for an analyst to be able to pull that within seconds when it might have taken a week of reading through, maybe 50, 100 company notes in a portfolio. So that's the kind of value we're trying to drive for the investment team, but it is very much being led by the investment team.
So not for decision making per se, or
yeah, we're a fundamental shop, right? Yeah. So it's the experience of our investors that is the core of our process, and so that remains the core. It's helping them to get the insights to make that decision. That's where we're really focusing.
And what about the challenges? Because I'm sure starting this and getting to where you are today wasn't easy. I mean, what advice can you offer to the audience out there for maybe a roadblock you hit or something that was a bit challenging and how you navigated through that?
Well, it's interesting because, when I talk to some of my peers at other shops, we just got Microsoft Copilot 3 months ago, and we're working with compliance and risk to figure out what to do with that, right? At Manulife, the Manulife parent company has been investing in AI for almost 10 years. I think it's like something like over $1 billion since 2017. And so when we started to look at AI for the front office, we already inherited all of that. And what does that mean? That means cloud partners. That means relationships with a lot of the foundational model providers. That means we have AI governance, right? So I feel like almost a little bit guilty that we had such a head start. But when it comes to challenges, I think they're similar to what a lot of other shops face. Investment management is a very competitive industry. Mm-hmm. AI innovation is going very fast. What does it mean to be in front of our colleagues in the finance department and putting together a roadmap when the technology is literally going to change completely within the next 3 months? That was a big challenge. What do you do with that? And then the other is, should we even be building this? I mean, we have a lot of wonderful technology partners that are investing heavily in AI. It's not obvious that we would have an edge in that. And what we came to were a couple of principles for our program. One, fiduciary duty has to be at the core, right? That's our responsible AI. Second, it really has to be investment-led. We talked a little bit about that. But I think what's interesting is we opted for the uncertainty. We have a fast prototype framework where we work directly with the investment teams. We try to deliver value pretty immediately, within a couple days or a week, with a prototype. And then we're willing to let these prototypes fall if they're not sufficient, or we scale them up into production once they've kind of proven their case. In terms of whether or not we should build, I think that really gets back to what would you do with that? And I think in terms of data sources, right, analysts might have 7, 8 platforms that they're trying to integrate data from, their own research notes. And so we think of that workflow integration as key. And that's a very good reason to build internally. A second is we can select models. It's hard for a vendor that has 100,000, 200,000 customers to really pick a model that is cost effective at the scale that they need. If we have 1,000, 2,000 internal investors that we're serving, we really can select a model that will provide the best value. And finally, the proprietary data. We like to keep it in the circle of trust in-house. So that's been a big part of it.
It's definitely a lot to take in. So listening to playing off of what Matt said, I know Workday uses AI as well a lot. And we were speaking earlier, and I know you were describing it as kind of this sous chef, right? I know my daughter's best movie is Ratatouille, so this is why I bring it up. Yeah. But how is AI working for Workday? And talk about some of the success stories, and then I want to get into maybe some of the challenges too.
Yeah, so maybe just within my functions.
Sure.
So largely my teams are all the delivery functions. So if you think about professional services, support, education, kind of all the paid service offerings, it is our sous chef. I like to think it brings the best recipe together, right, all the right ingredients, much to what you said, to really allow them to kind of take the best action with the customer and free up their time to innovate and drive different changes. So for us, it's about driving innovation with our customers and not having to do a lot of the blocking and tackling. And hopefully AI can provide a lot of that, those ingredients so that we can jump right to the innovation. So when we think about innovating with our customers, Instacart's a great example. So we were able to innovate on the platform with our Extend products, which basically allows them to customize to an extent some of what they do with Workday, and they built like an amazing performance application that saved their teams a significant amount of time. Or if I think about HPE, they leverage Workday from a skills and talents perspective, so the AI we have within our products. And that's allowing their teams to be much more effective in internal mobility and how they retain their talent. So it's just a game changer when it comes to really that enablement and kind of driving it forward.
Now, what are some of the not so great moments that you had to kind of be faced with, and how did you handle that?
Yeah, and I think it hits on Matt's point. So sure. It's less about the technology being, the failure point. It's more about the change management and the governance. We did some research that basically showed, 62% of business stakeholders feel like AI is going to provide value. in a governed and trusted way. And that leaves 38% that don't feel confident. And so it's really about working with our customers to make sure that they feel that AI is responsible. We have the right fact sheets, They understand kind of the data sources it's pulling from to drive that confidence with them. So it's really bridging that is where the focus is.
And so we kind of touching upon this, the concern with AI risk or bias. And I know that's something that we've talked about, Matt, the risk of bias. Do you trust the information? Do you trust that your employees are using the technology the way that they should be? So how do you handle that, or how are you adjusting to that over at Manulife?
I have a lot of trust issues.
That's another type of chair talk.
Just get lay down a little bit.
Yeah.
And I think that's the right way to look at it. So when we're deploying technology, we look for partners who they can look at something and know whether it's right or wrong.
Okay.
Right. We had a great experience with our head of European fixed income trading, and he was working on a report, and something looked a little off. It was an early prototype. He was able to get that feedback to us, and we were able to enhance the guardrails there, right? And so when we're thinking of this, we're not trusting the technology, we're trusting the humans to use the technology responsibly, right? And that's really at the center of Manulife's broader AI principles for responsible development. And in thinking about, investments is a heavily regulated industry, we're very fortunate to have risk and compliance partners who were willing to meet with us when this was a very early stage working with interns kind of project. When we were just sort of initial explorations, we were able to meet with partners in risk and compliance and embed that in every stage. And so now as we're scaling our solutions to the investment teams, that's embedded in the products, and then we have monitoring in place to ensure that we're using things responsibly, and so we can better serve the clients, right? The investors that are part of our team. I think that's how we're thinking of it.
Now, how about for Sheri, when we spoke earlier, you said something kind of along the lines when we talked about technology, and you said the most advanced technology won't drive long-term returns without a foundation of trust. Yeah. So talk about that foundation of trust. Dig a little bit into that for us.
Yeah. So we strongly feel, and I strongly feel that trust is like the ultimate currency, right? That's what's going to, per my conversation earlier, to really build that long-term foundation with the customer that you can kind of rely on with our core values. But if I think about it, it really comes in probably three ways. One, we want to really create an open platform for our customers to talk to each other, to talk to us, to talk to, so that they're hearing best practice. They can, check, I always get asked, is this the best practice? Am I following it? So we want to make sure we have open platforms. And we use AI to make sure, right, that we're gaining all of the knowledge across all of those open platforms to make sure we're improving our data sets, et cetera. But we also want to make sure that we're advisors. So it comes back to understanding the problem we're solving for, and the technology is not going to be solving the right thing or bring the right return if we don't understand kind of what's the strategic question we're answering when it comes to the problem. So putting that all in context is critical to those relationships. And if I look at Salesforce, we just implemented a big finance platform for them through Workday, but it came through co-innovation and understanding what their business needs were around how do they pull all of these financial sources, given all the acquisitions they've done, right, and all of the changes that they've overcome, but really listening to them, building that trust, right, and then co-innovating together to make sure that they could bring all of that to do more hopefully faster month-end close, quarter-end close, right? All the things that become critical in your business processes. So those relationships are key, and those kind of value points, I think, on a continuous basis.
So going basically beyond just a vendor, like a trusted partner, and having that like human-centric approach to it. Okay, so let's talk about the enormous spend on AI, because there's a lot of talk about it and when it will pay off. So how do you approach that question if you're asked that, Matt? Because I know there's a big spend amount, and how do you justify?
Yeah, that's the big one, right?
Yes.
I think it's something we think a lot about, but the reality is, from my point of view, in the investment field, that spend is a strategic investment. I don't think we can think of it in terms of a technology expense. And I mean, $1 billion since 2017 is a pretty solid foundation for us to kind of extend to the front office teams, right? So when we're thinking of spend, you have to have a certain level of certainty about the future, right? There's typically a capital budgeting framework where you're looking at a project, the cost, the benefits. There has to be some kind of ROI, some kind of NPV with that. And how do you do that if, I mean, no 5-year-old says, I want to grow up to be the head of investment AI, right? Like, it just wasn't in the cards.
Here we are.
Here we are. And the technology is literally changing. I mean, it's hard for me to say what's going to happen in 3 months. So I think that's the central tension that we have to think about when it comes to spend. Not so much are we spending too much and not getting enough, but how do we struggle with that certainty that we need to kind of assume to allocate capital, and the uncertainty from the speed of innovation in AI, the hyper-competitive nature of the investment business. And I think our answer was this fast prototype framework. It seemed like a responsible way to minimize the risk. And that's not to say we don't scale that up, but we scale up the things that are landing with the investment teams. And when it comes to that spend, we're not thinking in terms of efficiency of the investment process, right? This is not it's not a cost center, right? We have a fiduciary obligation to our clients. And if there are tools in the market that give us an edge, that can help us accelerate that step from data to analysis to insight, if we can compress that time, that's going to be table stakes. I think we have a credible claim that what we've done very well is listen to the investment team rather than kind of come in and dictate, here's how you should work and here's what you can do. And I think I might have slightly dodged the question.
You're good at that.
But I tried to do so in an honest way.
No, but it is. I mean, these are questions that are being asked, and there's a certain way to handle these certain questions, whether you go around them.
But speed is a strategy, right? And that's basically what you lay out, right?
Write that down.
Yeah.
Well, speaking of it, Sheri, so in the different positions you've held, what's some of the misconceptions that people may have or leaders may have about technology and the investment in technology?
Yeah, so I think a big one is technology to just kind of shoot for the next shiny object. And it's really not about understanding, again, just the technology. It's understanding those problems we're solving for, and how do you really create clarity, for strategic clarity, for when you should make that investment because it's solving a problem. And maybe it's, some people will say, well, it's a problem you didn't know you had. Well, I'm not sure if that's entirely true, right? Because there are problems to solve, and it's just different ways to get to that means. And so being super thoughtful about that, and then also not forgetting the human element to your comments earlier, Lisa. Right? It's not just about the tech, but how do you change the adoption strategy? How do you change the change management? Like, how do you bring those together so you're reaching the outcome that you intended? So that coupling is super important.
Now, as we start to wind down, we're kind of take a look ahead. What emerging technologies are you keeping an eye on? Because there was a question from the audience earlier. How will agentic AI tool use affect the investment landscape?
Oh, I'm quite excited about that.
I know you do get very excited about it.
Yeah.
Go ahead.
So if we think about a lot of the work we've done, it's been with qualitative data, right? LLMs are fantastic at text processing. I'm sort of a reformed quant. We're very much in the numeric space.
Okay.
And LLMs struggle with that, right? We've seen how many R's are in strawberry. The models have gotten better since then for sure. But with agentic, we unlock this capability to integrate the quantitative and qualitative, which has kind of been the holy grail of investing since, for quite a long time, I guess. And so I think with agentic, and we're prototyping this now, it's the chance to be able to break complex tasks into simple parts, right? So you could ask you could ask an analyst, compare CapEx of these 4 companies with the revenue of this other company. You have to have an agent that understands what CapEx is, that can source the data, that can validate the data, that can understand what you mean by compare. Is that a regression? Is that a correlation? And then render that data, like do the actual regression or correlation, maybe chart it. That's kind of what the power of agentic is going to unlock. So the data security is obviously the question that's kind of hovering in the background, and we're thinking a lot about that as well.
There's a lot to look forward to. That's what keeps you up at night. I know that. And Sheri, where do you see Workday, let's say looking 10 years ahead or now? How is Workday kind of planning for the future?
Yeah. I don't know about 10 years. That's a long
10,
time.
yes.
I would say in the next few years, I mean, AI is going to be a force multiplier in terms of the speed at which we can operate, right? The value we can bring, and really the personalization that we can do for customers. I mean, it's almost like the technology fades a little bit into the background. I mean, it's foundational to where we're going to get, right, and where we'll continue to be. But then it's really about those human connected experiences that you build on top of that. So it's going to be so important, right, that those, we really understand that kind of how we're bringing those to bear within the experience, within the products that we have, right, and how those will drive the future.